Good afternoon, good morning, good evening, everyone. It is the 4th of February, 2021, Wednesday, 12:43 p.m. Eastern Standard Time. Taking a look at our cryptocurrency markets, specifically Ethereum. If you missed it yesterday, that Ethereum continued to spike up higher. In fact, ever since the 2nd, we've seen Ethereum create new all-time highs. Today, it looks like we may be getting a little too top-heavy. It looks like we may be getting into the froth zone here. So what's interesting about this is that the current level is the exact 100 level of, when I had it on the weekly chart, of the Fibonacci extension of our prior swings. This particular candlestick pattern is not a bullish one. This is quite bearish. Some people will call this a spinning top. Some people will call it a hammer. There are like over 220 some candlestick patterns. I don't put a lot of faith in them. Just look at the candlesticks, tell a story. It's your job to interpret them. To me, this is interpreted as not very healthy. I would much prefer to see this daily candlestick the way it is, with volume higher than the last couple days here. We do have about another 6 hours left, 6 and change hours left until the daily candle is terminated. But otherwise, let's take a look at some of the activity here. So last hour, 11 o'clock, we had a pretty nice bounce, 3% bounce. Transitioning into this hour now, as we're kind of getting into the last, we're in the last 15 minutes of this hour. We're seeing some weakness up top, right up against this high volume node. It looks like we may just continue to the south, although these are cryptocurrencies. Things can go bonkers. I've been kind of beating a dead horse here by saying that, I don't like where the market's at as far as its levels. I want to see a corrective action before I step back in. I kind of got teased into adding into a little bit more Cardano yesterday. I'd actually sold some at 0.44 on I think it was on Monday. I bought back in a little bit higher at 0.444. Kind of regretting that, but I still have a lot of gunpowder left for a drop, which we've seen a lot of the market have some pretty steep tests of moves south that were supported. And instead what we're seeing is buybacks going higher. But let's take a look at the high time frames. Here's the weekly chart for Ethereum. We are near these historical highs. We just saw on Ethereum on the week of January 4th, we had the highest RSI reading that we've seen since the 12th of June 2017. If we look at the 3-week chart, now we're getting into some interesting levels here. So we're at 90.93. The prior high is at 91.3. The all-time high is in May of 2017. That is at 97.69. Everything on this high time frame is overdone. The candlestick itself on the 3-week chart does not look like a healthy one. It looks very much like we are going to get stopped up here. Irrational exuberance does some crazy things, and so there's no reason why we couldn't see it spike up to 5,000. There's really not. But the RSI is sitting at 91 on the 3-week chart. I love the 3-week chart. It's very, very respected across multiple instruments. I know somebody had asked in the comments once, why do I use a 3-week chart? Honestly, I use it because my mentor suggested using it, and I've never found fault with it. And it is very universal across, all markets. A 3-week period is a pretty good test period for averaging major moves over a long period of time. So we're still looking at the downside move here. This would be, if this closes green, or in this case white, the next 3-week candle Doesn't form until February 15th. So that's 11 days away. But if it stays the way it is, and we've only got 11 days left in this candle, we were not even halfway of the volume that we had the last 3-week candle. So it's looking a little underwhelming up here. And everything's very accelerated. We do have some regular bearish divergence at these extremes. Eek is all I have to say. I'll just be very, very, very careful about attempting to take any massive long positions. On Bitcoin too, there's this divergence. Flat RSI, lower highs on the composite index. This is all pointing to some imminent weakness. And if you see the stock market start to push south and start to sell off, the cryptocurrencies are going to follow suit. There's going to be a pretty rapid descent. We should anticipate what really occurred during the COVID crash last March, almost a year ago, where when we saw the markets collapse in response to the COVID panic. Every asset class dumped. Everything did. Including cryptocurrencies. So everything faced a huge, broad drop. So all risk on and risk off assets took a collapse. I hope for another major collapse like that. I'm a permabull when it comes to this market. I love seeing huge sell-offs in the greater than 60 or 70% moves. I love those because it's like a gift. I think that's the kind of mindset that you have to have when you're looking at the cryptocurrency market. You have to look at opportunities to get in at cheaper prices as good things, not bad things. But yeah, this is really just looking like it's going to continue to push south from where we're at. And yeah, just be careful going on the long side of this market. Be careful going on the short side too, because when a market is experiencing irrational exuberance, to quote Alan Greenspan, there's no telling how high it can go. When things go parabolic, those are some of the most dangerous times to trade. And when something is parabolic, you don't want to trade against that move because it's not going to stop where you think it will. I don't think we're parabolic right now. I think we've had a lot of breathing room across the whole market, a lot of time for people to assess value, and we've seen momentum kind of drop off a little bit as far as participation is concerned, not as far as price is concerned. But yes. Anyways, it'll be interesting to see what this market does after tomorrow. I'll talk to you again tomorrow. Thanks for watching. From all of us here at Exchange Rates UK TV, please don't forget to like and subscribe. Have a great day.